Hi, everybody. Good morning. Good morning. I'm not sure if you guys are in morning zone or in afternoon zone. So I'd love to know right here in the question box. Do you guys see the question box? Can you guys go in and say hello, good morning or afternoon, and let me know where you guys are coming in from? Right here. Do you guys see that question box? I want you guys to go into it and write in there so that this is an interactive and a fun summit. Hello, Nicola. Where are you from? Oh, from Saudi Arabia. Wow. Very cool. What time is it in Saudi Arabia actually right now? You're from Birmingham, England, or Birmingham, Alabama? Is there even a Birmingham, England? No, that's not what I'm thinking. It's a different one. 7 p.m., I guess, right? Oh, I was right. Birmingham, UK. Okay, good for me. Hi from Portland, Oregon. Very cool. Yes, it's a morning for you, right? It's like 9 a.m. for Oregon. Also from the UK, Paul. Great. Hi, Kimberly from Chicago. Hi, Wooten. And Wooten, where are you from? And Sumaya. Hopefully I pronounced that correctly. It's 5 p.m. in the UK. Yeah. Pinky, Michigan, Vince. Nice. Hi, Tapia, Jocelyn. I'm so happy you guys are all here. This is awesome. Thank you for joining and thank you for joining us. It's actually been quite a while. I feel like it's been a little while since I've been on Investor Expo. I've been traveling a lot. I took 3 weeks off and we've been traveling around. So now I'm finally back at the office and ready to go. So guys, the whole point of this presentation is definitely for you to learn something. I actually always tell my kids, if you learn one thing and implement it and apply it, that could be the thing that changes everything. Hopefully you guys will learn that one thing and hopefully more, but also the way you learn best is when you ask questions and you become interactive. So I am here for you to ask those questions, okay? I don't want to just be speaking and hearing myself speak. I really want to be able to help you guys as much as possible. So please feel comfortable asking. There is no bad question. And a lot of times the questions other people might not feel comfortable enough asking and are grateful that you guys are asking that question, right? So remember, all questions are good questions. And let's begin. So today I want to talk about understanding the power of the breakout trade. But before we do, I want to say hello. This is me, Marina, the trader chick. And what we're going to be covering today is understanding market movement, because if we don't understand how the movement works, we're not going to be able to set ourselves up for those entries and even most important thing, the profit targets, which we could get from the breakout trades. Okay, so before we get in, I want to do a quick intro. This is me. I am Marina. I am an expat living in Antigua, Guatemala. Those are my two boys. And before I became a day trader, I was actually a fitness instructor and a travel writer. Why do I bring this up? Mainly because a lot of people believe that they have to have some sort of a background to go into day trading. I was a fitness instructor. Trust me, you guys don't need any kind of a background. As long as you're committed to learning how to do it, you guys will master day trading. It's not complicated. It's not easy, but it's certainly not complicated, especially when you're understanding like the basics of it. And that's really what I want to cover today. I also want to bring up that I'm trilingual, mainly because first of all, I was born in the Soviet Union, so my main language, my mother language is Russian, but my main language is English because we moved to the United States when I was young and I was able to completely assimilate and learn English but I started when I was really young. I was 6 years old. So for me, learning English wasn't really learning a new language. It was just kind of still in the process of learning a language. So I learned it really quickly. However, I've now been living in Central America as an expat for over 20 years, and I learned Spanish in my late 20s. And when you learn a new language, it's this whole process that you have to go through. First of all, you have to commit to practice, to really putting in the work to learn the language. Then you need to just practice, right? And it's interesting because one day you go from translating everything in your head to just knowing the language. And one thing I realized when I started to learn how to trade, and I was struggling for years, is once I looked at the market and the market language, I realized that it's like a language, and I started to focus on it as if though it was a new language overall. And that's when it clicked for me. And hopefully that's something that you guys could see it as well, like learning a brand new language. You would never walk into a room. For instance, if I'm learning Spanish and I'm barely past the point of hola, mi nombre es Marina, and walking into a room and expecting to have a philosophical conversation with 6 native language speakers, right? It's completely ludicrous. People, you would never do that, right? None of you in this room could possibly even consider doing that. You would understand that you need to learn the language. Yet, because there's absolutely no barrier to entry when we are going into the financial markets, all we think is, oh, I have some money, I could become rich. Totally not true. You have to learn the language of the markets. And that means not putting in your real hard-earned money into the market until you learn how to work with the market. And that's really what I want to talk to you guys about today. And the cool thing about day trading, you can do it from anywhere. And before COVID, I used to actually be featured on quite a lot of live presentations as well. I used to do a lot of money show, traders expo stuff, and now I really love being online virtually because I think there's a lot more people that can benefit from it. Not everyone can fly to New York, Chicago, Vegas, right? So that's kind of like the cool thing about being virtual now, is that I could talk to a lot more people. Now, before we jump into everything, I want you to understand the market really can be broken down into 4 basic strategies. It's not complicated. I'm going to say that over and over again. But you do still need to have a foundation, right? You cannot put in windows without having your walls already built in. And those are the 4 strategies that I really want to talk to you guys about today. Now, before I go any further, I have this entire presentation for you on a free document. Go to makingofadaytrader.com. Like Anna said, she will be posting the entire presentation so you can go over it with your, once you get the replay, with this free document. So make sure you go to makingofadaytrader.com. makingofadaytrader.com. Go and get your free worksheet to go along with the presentation right now, and let's dive in. I want to talk about getting back to those basics so that we can truly understand the market movement. But first and foremost, guys, you cannot become a Formula One driver in a minivan, right? What does that mean? It means if you really want to take your trading, your financial career, marketing career seriously, you need to have the proper tools. And that really begins with a charting platform. You need to have a good, strong charting platform. You don't need to buy all the different softwares and algorithms and all these flashing lights, but you do need to have a good platform, right? It's like you having a good car. Just because you put more money into a big speaker or cool rim tires doesn't mean the car is going to be running better. It's just kind of like little gadgets, but you still have the good motor, and that's your software. Good software, good platforms, they give you free universal indicators. You do not need to buy indicators. Guys, get that through your head. It's not going to make you a better trader. It's just going to make you spend more money before you could actually put it into work. Okay? Again, go here, get your presentation, makingofadaytrader.com. Go here. Now, let's jump in. Market movement, the breakdown of a trend. Look, we all know logistically that there are 3 trends, right? We've got the upward trend, we've got the downward trend, but we also have the sideways trend, right? The sideways trend is literally, I call it the trader's worst enemy. Why? Because this is where the majority of our profits of the day, and sometimes even the money in our accounts, get lost, because we need to understand this concept. Okay, and that's what I really want to focus on today, because this is where the majority of the money gets lost, but you could also have the majority of your money made if you could spot these areas. All right, hang on one second. My dog is going crazy. and she got locked up upstairs and the door was not opening for her. Okay, so what is a sideways market? This is the reverse, this is the consolidation area, the indecision area. This is the exhaustion pattern, the chop, I don't care what you call it. This is a place where there is absolutely no movement. This is where there is no confirmation what the market is going to do. Now, what is the upward trend? I just want to bring this into a basic understanding. It's literally when each pivot is going further, is continuing up higher than the last pivot, right? This is the upward trend. This is what we call the bull market. This is what we call market trending up, market going up. This is when you go for the buy. This is when you are buying. You're going long. What does that mean? Basically, you're buying at a lower price point, exiting at a higher price point. Don't overthink it. It's really that simple. That is an upward trend. That's when you're going long. That's when you're buying. What is a downward trend? It's the opposite. And day traders make as much money, if not more, on the market going down. That means each pivot is lower than the last pivot. This is when you're entering a short. You are selling. What does that mean? Again, pretty simplistic terms. You're getting in at a higher price point, exiting at a lower price point, and taking the profit in between. And that's it. Don't overthink it. Don't over emotionalize it. Oh, well, somebody's losing money. Who cares? Who is that somebody? Do you know them personally? You're in it for you. Don't think about others. Oh, there's more buyers and sellers. What does that even mean? People throw these words around and they don't have a clue what they mean. Look, none of those things matter. All you have to know is what is the market telling me? And that's all through technical analysis. Am I going for a long? Am I going for a short? Where do I get out? That's all you need to know, right? Shorting the market. So don't even think about it. Oh, but somebody's getting hurt. Who cares? You got to do what you got to do. We're in it to make money. That's literally what all of this is all about, right? It's not about appeasing other people at all. So let's talk about these consolidation transitional areas. I literally call them the trader's worst enemy. How can we learn to spot them and to avoid them? What is a consolidation area? It's this place where there's absolutely no movement. It's a bouncing back and forth. Do you really want to put your money into an area which is going back and forth and doesn't have any real idea of where it's going? I want to explain to you why we end up losing money in these areas. Interestingly enough, it's not because we're not listening to the technical analysis. It's because we're listening to the demons in our heads. And what do those demons do? They tell us nonsense stories. Okay, so what does a nonsense story look like? I'll give you one that you could all understand universally. Imagine you met somebody that you really like. It could be either an intimate partner or a new friend. I don't care. And you're hanging out with them and you really like them and you feel like you're getting along. And they're like, hey, I'm having a party in 2 days. Do you want to come? You're like, oh, yeah, for sure. And they're like, okay, I'll call you tomorrow to give you all the information. Tomorrow comes and goes and they don't call you. And what do you start to do? You start to tell yourself bullshit stories. Oh, my God, did I say something wrong? Did they maybe not like me? Maybe they spoke to somebody else and that other person said something wrong about me. We always go to the negative stories, right? This is a universal. If you're not going through those stories or you've never gone, you're not human, right? We're all human. So then 2 days later, this person calls you up. They're like, oh my goodness, I'm so sorry. I dropped my phone in the toilet and I lost everybody's contacts. It took me this long to finally get it. So what does that mean? The whole story and all that suffering you caused yourself internally wasn't true, right? It was a lie. It's emotional baggage. That's what happens when we start to see consolidating markets, because we start to tell ourselves emotional nonsense. People, there's two types of traders. The trend is your friend kind of trader, and they will look at this and be like, you know what? The market's been going up all day. I'm going long. Or the contrarian trader. You know what? The market's been going up all day. It's got to correct. I'm going for a short. Both of those stories are total lies. They're not real, right? Because what's happening is the market's going flat. Nothing's happening. All you need to know is there is no movement. I'm not putting my money in until I get confirmation. That's it. stay. Okay, so this is really important because we don't know what the market is going to do. But right now, what's the market telling us? It's telling us it's flat, it's dead, it's neutral. It doesn't know what it's going to do. So you need to listen to this. And it could be large, huge vocalizations, don't touch me, or you could have little ones. You know what? Let me just take a breather before I decide where I want to go. You need to work with the market. And once you work with the market, everything else starts to flow. Okay, this is what these consolidation areas, indecision areas, sideways patterns, exhaustion patterns look like. As a trader, a professional trader, you need to understand that. Now, how do we start to mark off these areas so that we can understand when they're happening? Because the market respects them, and we as the individual retail trader also need to understand them and respect them. Okay, so what does it look like? Okay, areas. Guys, so here's the thing. I'm going to go back to Formula One again because we can all relate to Formula One. I don't care if you're a fan or not. You all know what Formula One is, right? So in the Formula One world, in the racing world, it is a known fact during racing season, 25% of the drivers either get into a car accident or have a fatality. Right? I mean, just an accident or a fatality is pretty severe. So when these drivers enter the cars, do you really think they're going to just jump in and press on the speed pedal and go 200 miles per hour? Absolutely not. They have their helmet on. They have their fireproof uniform on. They have their seat belts on. We need to protect ourselves, and areas, support resistance areas are our safety gears. Okay, this is what supports us because the market respects these areas and we do too. And chances are you're not going to break through it until the market breaks through it. So you pretending that you think when it's going to happen, it's nonsense. It's another story you're telling yourself. So what is the resistance area? It's literally the ceiling. It is where the market is hitting over and over and over again, 4 or more times, and we need to respect that area. We need to stay out of it until it either changes direction or breaks out of that area. And the market respects areas, so you can revisit it several times. So you need to have this going on during your trading session and even sometimes into the day after and the day after that. Okay, so you need to understand this. This is a resistance area. It is the ceiling of the market. It can very well stop a very strong trending market and keep it going flat and then maybe even transition it all together. Now, what is a support area? It's the opposite. It is the floor of the market. It is when there's a downward trend and it's hitting over and over and over again and not breaking through. This is the support area. Okay, super important, guys. And you need to draw these in. You cannot be putting on your mental seatbelts, right? Like when you're putting on your mental stops, it's as silly as putting on a mental seatbelt on your baby and telling yourself, trying to convince yourself that you're going to protect that baby in a hardcore accident. Right. I mean, that sounds crazy, right? Yet we do it every day in the market by telling us we're going to put in a mental stop and we could get out when we're ready. Nonsense. When the market is going the wrong opposite way, it's like literally having a car accident. It's the same impact, okay? Draw these areas in. Protect yourselves. Put your seatbelts on. Every good platform has free drawing tools. This way, you could also draw resistance and support area when you have a channeling market, when you're in that indecision zone, in that flat zone. Okay, so that you are ready to see when it breaks through so that we can be prepared for that breakout. Because look at this ugly behavior. And this happens all the time. So you need to protect yourself. You need to stay out of these channeling markets until they have real confirmation. Okay, real positive confirmation. So draw these areas in, guys. If you get one thing out of my presentation today, draw these areas in. They will save you so much money, so much stress. Protect yourselves, okay? That's the most important thing. Otherwise, you are literally donating your money to the market, and that is not that fun, right? You don't want to just be donating the money in the market when there are so many ways to fully stop that. Now, how do we recognize these areas in the very beginning stages, right? So that we already know when they're happening. Because yes, chances are you might lose in the very beginning of it, but you don't want to keep on losing, because that's what the majority of people do. They end up keep on losing because they don't understand how to work with those areas. So how do we start to recognize that? Reversal areas and divergences. I literally call these the trader's map to shift in direction and trends. Double bottoms, triple bottoms, double tops, triple tops, head and shoulders. These are precious. They are free and they are so easy to understand. Reversal patterns. When you guys spot these reversal patterns, you need to understand right away, this is not a 100% indication of a reversal. What it is 100% indication of is that the market has lost its strength. And you need to get out and wait to see what the market does, because it can be the beginning of a resistance area, or it can very well be an entire reversal region. Now, what is a divergence? I live for divergence. I only use two indicators, my EMA lines and the MACDs. The MACDs work directly with price action. So here you can see that my price action is going up, yet my divergence in the MACDs is telling me that it's going down. What does that tell me? It's telling me that the market is losing its steam. It's losing its strength. Okay? That's the most important thing. Now, when I see a double bottom like this and divergence, for me, that is 100% stay out entirely, because the market is very uncertain and it can very highly reverse, but I don't want to be putting my money on the reversal until I have massive confirmation. And that happens after it moves out of the way. And that's when my MACDs are completely shifted direction and are giving me that strength. But if I don't understand how to read beforehand, I'm going to miss those other signs. Okay. And even though I'm showing you right here, divergence in the reversal pattern, I want you to look here. You can see here, my price action is going down. Yet my MACDs are already telling me, hey, the market is slowing down. The market is starting to lose its energy. And boom, that's exactly, and this reconfirms it and completely changes direction. Okay, guys, this is what it looks like. Now, let's put all of this together. Remember, everything that I have been telling you, I have in the free worksheet, makingofadaytrader.com. makingofadaytrader.com. Okay, you could go here, get this whole thing for free. Now, let's talk about the breakout areas, because if you don't have the other stuff that I just taught you, you're going to miss out on the most important kind of trade, the breakout trade. What is a breakout trade? So here we have our resistance area, and boom, it's a continuation. So in layman's terms, basically is you live here at this very point here. Your friend, family member lives north, and they invited you to a last minute party. You hop in your car, you get on the highway that you know so well, total confidence, but all of a sudden, as you're driving, there's a huge construction site, and the construction worker is telling you to get off the road. It's a detour, and guess what? You're in an area that you've never been before, and you're stressing out. Google Maps has not picked that up yet. Waze hasn't either. What if they stop with the detour signs? What if you get totally lost? What if they close the road and you cannot go anywhere? What is going on in your mind? A lot of what ifs. What is this area? That's the consolidation area. That is when you don't know what's going to happen. But all of a sudden, the construction worker is like, yep, road open, boom, you can continue. You're back on that highway with full vigor and full confidence. That's the breakout trade. Okay, I cannot put it any easier for you. You live here, massive construction site. You don't know what's going on. You do not want to be making any real decisions here. Boom, the market continues up, and you are ready to go. That's what that looks like. Okay, guys. Now, let's talk about the breakout trade setup itself. So, as I mentioned earlier, I only use two indicators. I use my EMAs and the MACDs. Here we have a massive, massive resistance area, and it finally breaks through. Here you can see my MACDs are super strong, ready to go. Boom. breaks through, I use my EMA lines for entries. This is where I enter because, you know, like an archer, they don't just roam around fields ready to throw their arrow. They have to stand from somewhere to throw their arrow at the bullseye. Traders, we need to know exactly where to tell the market where we are entering. We cannot just go in blindly because that tells the market, oh, total amateur. I'm even going to penalize them by slippage and taking away 20% of their winnings. I don't know if you guys have ever heard of that before. If not, you could write to me and I'm happy to tell you more about it. But you need to tell the market exactly where you want to go, and that's called a limit order. Okay? Now, let's talk about another really cool trade setup because you could use these areas to do that, and that is the initial instant reaction trade. Basically what it is, it's knowing when the transition happens, because when a new trend happens, boom, massive strength going on in that direction, and you want to get in on that as early as possible. But that all happens when you are drawing out the areas, when you are understanding what the market is telling you. All right, guys, makingofadaytrader.com. And now I want to go in a little bit into the live analysis and the way I actually look at the charts. So today, the market has been pretty crap in the beginning. As you can see here, we have a oops, that's not what I wanted to do. I wanted, look at this. It's a really strong resistance area that's been going on for the majority of the day until it finally started to go down. First, we had this little support area. Then we had this little support area. But I want you to look here. Look at this. It's hitting that exact support area. And chances of this breaking through could be good or bad. We don't know. That's not what we're here to do. We don't care if it's going to break out or not. What we do care about, if it's not, boom, I want to be ready to get on top. If it does, boom, I want to be ready for the breakout. But I'm not going to anticipate, predict, or pretend I can beat the market. Because look what happens. A lot of times the market really stays in the area because it respects the area, right? Now, if it's breaking out and it looks like it's starting to really break out, great. I am super excited to get ready for that breakout trade. What does that mean? Right here is my 20 EMA line. When it breaks through, I am ready to hop on with that breakout because that is giving me extra confirmation that this is going to continue. And right here, you can see that it is definitely breaking through. So what will I be doing? Right here, I will be putting in my limit order and telling the market that I want to enter here. Ooh, that was a total accident. That was a total accident, and I have to get out. That was not at all anticipated. At this point, I'm in. But I'll be putting in right here. I just made some money without really wanting to. I wanted to put it in and work with it. So I let go accidentally. If I don't let go, I'm good to go. But this is where I want to enter my breakout trade right here. Okay, I'll be following along until I feel confident enough to let it go there. But it is a definite breakout going on right here. Okay. This is where I will be entering at my EMA. I'll be telling, because look at this beautiful move with the MACDs as well. I mean, it's perfect, right? So this is where I would be telling the market that I want to enter because my EMA line will get to there quickly enough. Boom, look at this strength. This is screaming at me that the market is going to continue in that direction. Okay, this is what we learn when we are together, right? So this is amazing exercise showing you guys where is a good place to enter because we just broke this pretty decent support area, right? Okay, let me get back to my presentation because we only have 10 more minutes left. Okay, guys, so the thing is, we have absolutely everything we need. Can you guys hear me? Hello, hello, hello. Did I just lose?
The sound is good, no
Okay,
worries.
sorry. Okay. Okay, cool. So everything you guys need to take action is right here in front of you. You've got the YouTubers, you've got the different books, podcasts, presentations. But at the end of the day, how do you know if you are doing it right? How do you know you're doing it right? You know that they're doing it, but how do you know if you're doing it? Just because they could do it doesn't mean that you can do it without actually applying and really learning what you are doing, right? All of this is great that we have at our fingerprints, tips, but the real question you're probably asking is, how do I really get started? And this is not a question I get from beginners only, but from seasoned traders who have been trading for ages but are still not consistent. I'm always asked, how do I turn this around? How do I become profitable consistently? And a lot of times it's literally just lacking the understanding of the basics, understanding where is that consolidation area? How do I get into that breakout trade? How do I spot those reversal areas? This is the basics, and it's awesome, right? Look, as with a car, I have the great benefit right now. My 18-year-old son just learned how to drive a car. When we first sat down in the car, me or my husband, and we're like, okay, buckle in, put put your car into first gear, make sure your clutch is pressed, make sure the brake is pressed. And he's like, wait, brake, clutch, gears, I don't understand any of it. But today, whenever you guys sit in the car, it's automatic, right? But he had to learn it. And it's the same thing with trading. Look, if somebody gets into your car who's never been in a car before, and you're like, okay, buckle up, this is going to save your life, they're going to be like, okay, well, buckle up. What do I have to buckle in? This is going to save my life. If I don't do it, you get all flustered, right? But you know that this is going to save your life. But these things are automatic to us now, but you first have to apply them. Look, my own sad truth is I spent over $20,000 in trainings and I was never taught the basics, right? Whenever I was asking about the basics, I was constantly either overlooked or treated like I'm supposed to be born with that information. But we're not all born knowing where the clutch and the gear shift is, right? We're not born knowing that. We learned it. And same for trading, and even more so for trading, because not everybody is doing it like they are driving a car. And I was struggling for years to the point where I ended up losing almost $4,000 in 5 minutes sitting in a chat room. At this point, I was just desperate, listening to somebody else say, okay, this is a great trade. And I'm like, oh my God, but why is it a great trade? I don't understand. Boom, lost it. And after that, I quit. I totally walked away. But the problem is, and I know that everybody in this room feels the same, is that we are bit by the trading bug, right? And it never stops itching. And do you know why? Why it never stops itching? Because deep down inside, we know that we can do this. We totally know we can do this. And a lot of times it literally is just getting back to the basics. And that's what I did. I came back and I decided to get back to the basics. I completely cleared out my charts. I had 3 monitors. I literally donated 2 almost new monitors to the garbage men, went down to 1 monitor. I had over 10 indicators. I went down to 2 indicators, and that simplified my trading immensely, and I focused on the basics. And today, one of my students goes to me the other day. He's like, you know, Marina, you remind me of John Wooden. And I'm like, who's John Wooden? And he's a coach. He was one of the most famous coaches ever for Los Angeles basketball team at UCLA. And his entire teaching philosophy was, when in doubt, get back to the basics. And this guy was incredible, right? Like, he's won over 88 national championships, over 10 NCAAs. I mean, this guy was a legend, and he trained legendary basketball players, right? These guys were incredible. Yet every time they started a new season, they would start from the basics. How to tie your shoe, how to roll up your sock, how to dribble the ball. Why? Because it doesn't matter what you know or what you think you know, because the ego always tells you think you know more than you do. Because if your shoe is untied and you're running and your shoe falls off and you sprain your ankle, guess what? You're sitting out on the sideline the rest of the season. You need to work with the basics. You need to have that foundation, and that's what it's all about. And that's how my introductory course was created. And only for you guys, special offer for participants only for people that have made it here today, because I'm so grateful for you guys taking your time to be live with me today. I really am. I have my bootcamp for day trading intro course. You can do it on any apparatus, desktop, laptop, iPhone, Android, tablets. All of this, you will get one-time price for $97. Go to bootcampfordaytrading.com. Go to bootcampfordaytrading.com so you can follow along with all that is offered. Put it into your URL right now. This is the time right now, guys. $97. Look, what can you get for $97 that will bring you this kind of an investment today? Going golfing, you know what's interesting? In Guatemala, $97 doesn't even cover one person. And that's in Guatemala. I can't even imagine what it's like in the rest of the world. You want to take your friends out for lunch? $97 used to cover my whole family, the four of us, when we used to go out to dinner with wine. Today in Guatemala, it doesn't even cover me and my husband with a glass of wine each. $97. So let me break this down for you. And again, you could go and check it all out with me as we're going. Bootcampfordaytrading.com. Okay, go here, prequel. This is what we're going to be, you're getting. First of all, understanding the whole day trading, understanding and simplifying it. I know a lot of people really struggle with the platform, and I have to say the majority of people end up losing money because they don't know how to set up their platform properly. I have a 30-minute tutorial. Boom, it does not matter which platform you're working with. I will help you get it set up so you don't have to worry about that, and you can get to the cool stuff of trading. We're going to be getting into the anatomy of the market, dissecting those markets, really understanding the upward trend, sideways trend, downward trend, understanding reversal and divergences. So there's no questioning it because it's so simple, but you need somebody to help you really see and understand what those telltale signs are, really putting in those support resistance areas to really be able to understand and protect yourself as well. Divergences for me are everything, and they have literally changed my entire trading game and helped me become successful. And understanding and mastering the power of that breakout, and also avoiding the fake out breakouts, because avoiding the fake out breakouts can be everything. Okay, to really understand where they are, and you will have unlimited access to this curriculum all the time. This is normally valued at $1,600. Everything that you are getting here, okay? $1,600. I have students from all over the world, because that is the coolest thing about trading, is that we can do it from anywhere in the world. Here's what Michelle had to say. I just finished boot camp, best money I ever spent. The homework and the feedback is invaluable. You are the only mentor that checks the work. Absolutely amazing. I am enjoying your boot camp. I am learning every day. Let me share something super important with you guys. Do you remember in the beginning when I asked you, how do you know you're doing it right? How do you know you're doing it right? Who is keeping you accountable? Who are you talking with? Guess what? I am putting in that one-time $97 price, 1 month, one-on-one, unlimited mentorship coaching with me. Unlimited. This is priceless in itself. You will be able to work with me for 1 entire month for free, included in that, unlimited. Everything you need to know, questions, charts, going live, you name it. That mentorship can be what will take you to that level of being consistent, profitably, all the time. Okay, and I have one extra bonus for you guys. Whoever signs up for it right now, you'll get 30 free days membership in my live trade chat room, where we do everything that I just showed you, taking live trades, really breaking down, implementing everything in the live market and doing it together as well. This is on top of the mentorship and on top of the curriculum. All of this is valued at $2,600 for you guys. $97. So go here right now, bootcampfordaytrading.com, one-time fee, guys, bootcampfordaytrading.com. Go here right now, bootcampfordaytrading.com. Here's what you guys get for that $97. This is a no-brainer. Everything in the course, working one-on-one with me. and the 30 days live chat room membership. Now, all of this, that $97, I'm going to get even more real with you, is less than the one trade you guys take per day, right? I know that I'm correct. You guys know that it's correct. $97 for all the education and working with me is less than the price of one trade. The cost of this course will bring you 10x return on your investment. So you can take out your friends and family hundreds of times for these types of dinners. Bootcampfordaytrading.com. But here's the thing. Because of my mentorship, I'm only able to do 25 spots. I'm only able to open it up for 25 students at a time because I give my full attention to you guys. So I'm only able to do 25 spots. So let's go right here. So when you put in bootcampfordaytrading.com right here, bootcampfordaytrading.com, it will take you to this order form right here. And you could do $97 one time, or if you want, you could do a payment plan of 2 times for $59 each. Okay, everything you get right here. Everything, one-time payment, $97. So go here, bootcampfordaytrading.com right now, bootcampfordaytrading.com. Okay, guys? This is where you will be taken to. Bootcamp for day trading, $97 one-time price. Okay, so this is a bootcamp for day trading right here, and I am open for any questions. We have a couple of minutes left, so please let me know if you guys have any questions or anything at all. I would love to hear from you guys. If not, remember, everything is right here. So we're going to go to, hang on a second, bootcampfordaytrading.com right here. This is less than one trade per day. And I'm 100% with you guys. Mentorship, feedback, you name it, I'm here for you guys. So I'm looking forward to working with you. And again, I really, really appreciate you guys showing up, taking that time to be here, because I know just being here alone, it takes a lot of time, right? Do you share your preferred settings? Yes, Craig, that is part of the tutorial. And if you want to go through your own settings, I can help you with that as well. Absolutely. It's not working, really? Oops. Let me see here. Well, you have to just put in all your information here. I don't really want to go and do that because it's going to charge me. But you have to press on the PayPal, and then you need to put in your money, your name, email address, and then once you press it, go here, click here to start, and you should be totally fine. If not, you can please email me at thetraderchick@gmail.com. Okay, but you should be okay. Let me know if you could get in. So you have to make sure you press on the PayPal first. Okay. Let me know, guys, if you have any other questions, and I'm very excited to work with you guys, and I'm here to completely help you along. All right, so looking forward to you guys. Remember, bootcampfordaytrading.com. You could choose credit card or PayPal, either one. And if not, if you have problems, let me know, thetraderchick@gmail.com. And thanks, Sana, so much for having me. And thank you all for being here and taking your time out to learn. I hope you guys really learned something today. And again, any questions you have, you could always contact me at thetraderchick@gmail.com. Thank you.
Well, welcome everybody. And again, just like the Trader Chick just said, thank you so much for being on this call. I know that it is some time throughout your day, but I hope that, not only what she taught and what I'm going to show you guys today, and the next presenter and all the presenters are going to be speaking today, you guys will be able to find some things that will be able to help you with your trading going forward. Okay. Just by show of hand, just to make sure that I am not missing anybody, can everybody hear me and see me well, or see my screen well, I should say, not see me, you won't be able to see me, but just give me a double Y if you can hear me well and you can see my screen as well, just to make sure. Excellent. Hey, Craig, thank you so much for that. Appreciate that. Okay. All right. Good win. Make sure. Thank you. All right. Good, guys. All right. Great. Okay. So let's just go ahead and jump right into it very quickly. Again, this is our risk disclosure statement. Basically, all this is saying that the government wants us to let you know I am not a licensed financial advisor. All I'm simply doing is showing you some things that's helped me with my trading with the intent and hope that it would help you too as well. What we're going to talk about today is some simple tips that you can use for candlestick analysis. Some people don't believe in candlesticks analysis. My goal here today is to hopefully show you that candlestick analysis does work. And if you're using this, that's great. If you're not using it, hopefully this will help you see that this is a tool that you should definitely add to your arsenal when looking at the stock market. Okay. A little bit about myself. I'm the chief technical strategist over here at Right Side Trading. We call our company Right Side Trading simply because the idea is to try to figure out what's going to happen on the right side of the chart. I have 17 years of accounting and investing background, and my biggest thing in the stock market is to try to identify good companies that are relatively, cheap, so to speak. When I say cheap, I'm not talking about like the $5 stocks or the penny stocks and stuff like that, but even if I have an Apple, how can I tell when Apple is relatively cheap for what Apple is? Okay, and that's kind of like what that does right there. Um, Also make sure that we minimize our risk, and I want to make sure that the stocks have good potential for growing and capital appreciation. So those are the things that we really, really focus on. And more of what we do is we really plan for like the month and the quarter. So if you're the type of person who doesn't mind having a trade that you can put on and monitor this over like a quarter or month to month basis. You're like a 9 to 5 type of person where you can't stay in front of the computer every single day. What I'm going to be showing you and how we trade is going to benefit you tremendously. Okay, I find people who are looking to retire, who are still working but are looking to retire, say, hey, I just want to kind of like start investing a little bit here and there. I don't have time because I'm still working 9 to 5. I don't have time to be watching it every single day. Then what we do here would definitely help you as a lot. Okay. But some of the calls that we've made from just being able to analyze charts is that the cryptocurrency crash that happened this year in January of this year, we called that. And we actually have a YouTube video where we posted this back in January where we said, look, cryptocurrency is going to crash. Watch out, watch out, watch out. And I'm not one of those guys that keep on saying, hey, things are going to go down over the years. And then when it finally does, you say, see, I told you. No, in January, because prior to that, I wasn't saying anything about cryptos, but by January, we started seeing the signs that, hey, something bad was going to happen to cryptos. And we warned people. I said, people won't really believe this. Let me go ahead and post this on social media. And so in January, we posted on social media that crypto is going to go down. And now we see what's happening. We also predicted when the market was at the top in January, said, look, guys, this market is not going higher. It's time to take your profits and let's see what happened. The pandemic, right before the pandemic, 2 weeks before the pandemic hit, we saw the top in the market simply by looking at candlestick analysis. And also when it hit bottom in 2020, March of 2020, we saw that too, which was very interesting because at that time, a lot of people were looking at data such as unemployment rates and unemployment claims and all that kind of stuff. And we were looking at the charts and say, hey, money's flowing back into the market. And so again, I'm going to show you just a few things because I can't show you everything, but I'm going to show you a few things that if you learn to see these things, you'll be able to see what the chart and stocks are preparing to do, is what I should say. Okay. Here is a sample of a report that we write every week. This is, you can see when I called the pandemic top in 2020. If you look at the date right here, January 24, 2020, that weekend, we wrote about that and said, because the market is in unison, we need to be ready for either a slowdown at best or a reversal at worst. The writing is already on the wall. It is time to take profit, exit your positions. The market is warning us to take heed. Now, this was before the pandemic. Now, we didn't know the pandemic was going to be, but we saw the warning signs that, hey, wait a second, market is warning us to take heed. Get out, get out. The writing is on the wall. Take your profits, exit your position. And you can see like the ferocity that we were talking about. So like, look, this is not something where you sit on the fence. This is real serious. Get out, get out, get out. Something is about to happen. The market is warning us. Nobody should say, hey, We didn't know that this was going to happen, okay? Now, conversely, at the end of the pandemic bottom, which was in March, we wrote again the week of. We said, look, have we found the bottom, or is this just a relief rally? Which is a question that a lot of people ask all the time. It says the answer is this. Just like we saw the bear signals that warned us of the bearish drop back in January, this time it is communicating that it is time to cover all our short positions, exit your shorts, and get ready for a rally. Ladies and gentlemen, this was March 27, 2020. You go look at what happened since then. The market rallied from that point on. So what was it? How is it that we were able to see these things, write about these things as it was happening? Here is a Bitcoin crash that I wrote about in January of this year. I said the more we zoom out, the clearer it's becoming that Bitcoin is displaying major topping pattern. This is going to look ugly. Now, keep in mind, this was in January before everybody knows what is happening now. So chances are very high that Bitcoin is going to suffer for the next 4 to 9 months. And the reason why I put that in there is because, like, when I was trying to first tell people, hey, something is wrong with Bitcoin, get out of cryptocurrencies, don't invest in cryptocurrencies. Nobody wanted to listen to what I had to say, because at that time, everybody was still talking about to the moon and beyond. And I said, no. And so when I actually first came out with this, people were like, oh, you don't know what you're talking about. And I said, watch, 4 to 9 months from now, you'll see this a whole lot differently. And they literally laughed at me. They scoffed and said, oh, 4 to 9 months, I'd have made so much money by then. And I said, okay, we'll see. Here we are now, 10 months later, and look at where cryptocurrency is, right? And while all this was happening, people were being told, just buy and hold, buy and hold. And I said, look, if you knew what to look for, you could have avoided even buying. People are like, I'm keep on buying the dip. And it's like, how's that working out right now? Because the more they buy the dip, the lower it keeps on going, or it's just not going anywhere. Wouldn't it be better if you had got out at the top and then just sit it all out, and instead invest in something else, or maybe short some other stocks in that process while you wait for the bottom to set? But the thing is, people don't know how to see the top and the bottom. And this notion that you cannot see the top and bottom, I don't believe in that. I do not agree with that whatsoever, because we've called tops and bottoms multiple times over and over and over. And this is the video that we posted on YouTube. You can go check out YouTube channel, Right Side Trading. You'll see me post this on there where I say, look, Bitcoin is going to suffer for the next 4 to 9 months. How were we able to see these things? How? Well, I'll show you this. Does anybody know what these candlestick signals are? Anybody? You can type in N if you don't know. Just kind of engage me, make sure that we're still together. And if you know what it is, just type it in. What candlestick signals are these? Now, again, candlestick signal, I didn't even invent them. Okay, it's not like I invented candlestick signals, but at the end of the day, I was able to study and see what was going on. So I see some people saying reversals, candlesticks. They are reversals. You're right. The last one is a doji. Not necessarily. If you're talking about the one all the way on the right here, that's not a doji. It looks like a doji, very close, but it's not. Okay. It means that we're selling. Yes and no. Some of them are selling signals, some of them are not. So quite frankly, these two right here are actually bullish signals. This one right here is a neutral. It's either bullish or bearish, depending on where we see these things. Okay. But these are candlestick signals that exist out there. One of the things I did was, Steve Nissen was who they credit as the grandfather of candlesticks. God bless him for the work that he did. Because of him, people like me can do what I do. And one of the things was that, when I studied his work, and then I tried to apply it, I started noticing that some were more prevalent than others. Okay. And I also noticed that even though there was like hundreds and hundreds and hundreds of candlestick signals, I realized that some of them never even appeared for about 4 or 5 years. And so what I started doing was I started taking note of the ones that I saw very, very frequently. Okay. And then in that process, I noticed some that I never heard of before, never even seen or studied before. And this is a few of them that I saw. And I was like, wow, nobody's really talking about this. Or what I also noticed is that, hey, the credence, certain candlesticks were not given the appropriate respect, and how significant these candlesticks are in relation to others, okay? And so I started paying more and more attention and started studying that out. And lo and behold, I started seeing things that a lot of people overlook when it comes to candlestick. I can't tell you how many times I've met people that say, oh, I know about candlesticks. I know all about candlesticks. And I said, okay, well, what is this one telling you? What's that one telling you? And it's like, I don't know, right? But take this very seriously. If you really truly understand candlesticks, you can start seeing what it does. And then some people say, well, they have big error rates. You know, some of them have false signals. We'll get into all that because I suffered those things too in the beginning. But one of the things I said, what would make me make sure I can identify the false runs from the real ones, and we were able to figure that out. So what I'm going to do is let me show you just one out of these three. I'm going to focus on this one right here, the last one over here, the hilltop candle, because that's one of the things that we've seen happening most recently. But this one on the right-hand side, we call this the right side candle. We call this the bottoms up. And then the one on the far right, we call the hilltop candle. And I'm going to focus on this hilltop candle, the one that I believe Yetman said looks like a doji, okay? This one right here. This is what we call a hilltop candle. Now, what is unique about the hilltop candle? Well, one of the things is the biggest thing we want to know is the high of the candle to the right needs to be higher than the candle to the left. Okay, the high. We want to like the highest point, regardless of the wick of the body, the highest point of this candle needs to be higher than the highest point on the one on the left. And then the lowest point also needs to be lower than the lowest point on the left. If you ever see something like that, that is what we call a hilltop candle. Okay. Now, the color doesn't matter. So it doesn't matter whether it's green, green, red, red, green or red, red or green. It doesn't matter. So that's why I had this all in gray because, you know, this is why I said it was neutral as far as like, you know, colors. I don't want it to be like, oh, because this one's a red one or this one's a green one or they both have red, then it must mean something. Nope. It has nothing to do with the color of the candle, more so than it's just that we have a higher high up here and a lower low down there. Does that make sense? Those are the two things that is important as far as that is concerned. And so the reason why we came up with the terminology hilltop is because of this. You know, I said, you know, if we want to see a higher high, which is this HI, and we also need to see a lower low right there. And usually what we want to see is that it appears at the top of a trend, okay, at the top of a trend or at the bottom of a trend, one of the two. But in this case, when I first discovered this, I noticed that it appeared usually at the top of a trend. And so that's where I came up with the top. I said, wait a second, we have a higher high, a lower low at the top of a trend. Why don't we just call it a what? Hilltop. So hopefully that makes sense, right? Just think about you climbing up the hill and you're at the top of the hill and now things about to roll over, okay? Ladies and gentlemen, I can't tell you how many times we've used this to predict tops over and over and over, got out of trades, got out of positions because we saw this hilltop at the top of a trend right before it rolled over, all right? Right before it rolled over. And I'm gonna show you some examples of that, okay? Now, every candlestick to me are not created equal. Every candlestick has their own unique quality. And this is something that I discovered when I started studying candlesticks and trying to see, hey, a bullish engulfer signal, why is it different from a bullish Rami signal? And what does it really communicate rather than just saying, oh, it's a bullish signal? And so one of the things I did was I went into much detail, just studying, like, what's the behavior? Like every time we see this pattern or this candlestick signal, what are some unique qualities that would eventually surface over and over and over? And so for the hilltop, here's what I found. I found that if you see a hilltop, which is higher, high, lower, low, and I showed all these different examples here because this right here is a doji, right? This candle right here is a doji. This candle right here is a doji. This candle right here is a doji, right? But it's also a hilltop. And so a lot of times people focus on one and miss the other one, okay? Now, just as much as this is a hilltop, this is a hilltop, doji, doji, doji. This is not a doji, but guess what? It's also a hilltop. So that's why I showed the various formats of how a hilltop can appear and why it's important to pay attention to this. One of the mistakes a lot of people make is they'll see one candlesticks and then they'll ignore it. But it's like, man, you're ignoring the hilltop you ignoring a hilltop is one of the biggest mistakes that I see traders make. Because right here, people will see this and say, "Oh, I know what that is. That's a bearish engulfing signal. Oh, there's nothing new that you're really showing." And it's like, yeah, it's a bearish engulfing, but what you fail to see is the hilltop, right? Or this one right here. Oh, I know what that is. That's a doji. I say, yeah, but what you fail to see is that that's actually a hilltop doji, okay? Which then makes things more, maybe not more, but it makes it a whole lot different. Like it brings new meaning to what you're seeing, okay? And yes, so Yetman is asking, is this more like a range expansion? I'm not sure what your definition of range expansion is, but you know the technical term for this is like outside day. Okay, if you want to know for sure, the technical term for this is called an outside day. Um, but again, a lot of people know about an outside day, but they don't understand the importance of this. And to me, I named it hilltop because before I learned about an outside day, this is what I discovered. And it just helps me realize, hey, the hilltop to me, it just has a little bit more umph and more power to this, saying that, hey, if I'm at the top of a hill and this thing is about to roll over, get ready. Okay. And so a hilltop at the top of an uptrend is usually a bearish signal. It warns us that a crash or a big drop is about to happen. And if we see it at the bottom of a downtrend, usually a bullish signal. It tells us get ready for an uptrend to take place. Let's go here to the charts so we can see examples of what we're talking about. Here is the S&P 500 on the monthly time frame. Okay, back in January, the reason why we called the top in January was because of this right here, ladies and gentlemen. See this that I highlighted right here? This is a hilltop pattern. We can see over here, if you pay attention to this, let me see if I can take this off. The high up here, let me see if I can do this. The high up here, I want you to see this. The high up here, you can see how the high up here is higher than the high to the low on the left. And the low obviously is lower than the one to the left. Right then and there, seeing something like that is say, hey, wait a second, that is a warning sign. That is a warning sign that, hey, things might start rolling over. And if you don't pay attention to this, what could end up happening is this situation happens and you miss out on what's going on. If we go to what happened even just right recently, notice how the market had been going down, 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 down. And then guess what happened not too long ago, right here. I was on a podcast just this last week. No, actually on Monday. I was on a podcast on Monday. And on that Monday, the host had asked the question, said, where do you see the market ending by the end of this week, higher or lower? And I said, higher. And he says, what percentage of confidence do you have that is actually going to go higher? And I said 90%. I said 90% sure it was going to go higher. He was like, whoa, what do you mean it's going to like 90%? You that sure? I said, yes, I'm that sure. You know why I was that sure? Look at this right here, ladies and gentlemen. That's the hilltop right there. Okay, right there. So when I saw that, I was like, wow. And when we first saw this, I even told my subscribers, I said, hey guys, get ready. You know, the market is getting ready for, even if it's a relief rally, we are getting ready for a move to the upside. So be aware of that, be warned. Now look at what the market has done, has been rallying ever since. It's not rocket science, nor is it luck. It's really just understanding what to look for. This is actually a bullish engulfing signal as well. You are absolutely correct. But remember what I said on those charts, right? Where I said, hey, it's possible that you get more than one. So this is kind of like what you have. It was almost the opposite of this. This is a bearish engulfing signal, but it was just a bullish version now. See, and so some people would see that and say, oh yeah, bullish engulfing signal. But to me, because it was a bullish engulfing signal and a hilltop, I was like, uh-oh, what does this tell us? We've been in a downtrend since then, right? This has been a downtrend. Oops, wrong one. We had been in a downtrend. And so me seeing that, I said, yep, this is a stock that is ready to do what? Ready to bounce. Now, because it's a daily time frame, it's like, okay, it's going to be a short bounce. The bigger the time frame, the more severe it becomes. So that's why when we go here to the monthly chart, and I saw this on the monthly chart, I was like, wow, okay, guys, get ready for something to happen. Here's Facebook. Facebook has been suffering for months now. Okay, even before this year, what most people were not aware of was the hilltop that occurred on Facebook's platform, technical charts, like back in what, September of last year. Now we see this happening. It's like, wait a second, um, what happened to Tesla? Da 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 da. And it's like the warning sign was there back in September of last year. Okay, here's Microsoft. Microsoft is suffering right now, right? But guess what? The warning sign was up there on the weekly time frame of Microsoft. And again, I'm just showing you one candlesticks, ladies and gentlemen. Okay, one. All right. Yet minutes I say, hey, Wally, Meta, horrible report last night. I'm not surprised. Do you prefer stocks or options? Personally, I prefer stocks. But if you understand how to use options, the biggest thing, one of the things I remember when I first started getting involved in the stock market was I loved options, but the problem was I had no idea where the direction was going to go. Okay. And so one of the things that this will help you do is if you like options and you know how to see directions, you'll be surprised how well you can do with these things. Okay. Google has the same thing. Tesla has the same thing. Actually, I have Tesla on here, I believe. I'll come to that. Gold. Look at gold. I've been warning people, stay away from gold. Please stay away from gold. Please stay away from gold. For months now, I've been telling people, please stay away from gold. Not only is the weekly chart showing that this is a hilltop, but there was other candlesticks that we saw on this that is even not the hilltop, but these right here, a huge warning sign. We can see the double top taking place. Ladies and gentlemen, there are so much. And again, I'm just focused on one because we don't have enough time to go through everything. And you can see that I'm speaking very fast because I'm trying to cover a lot of material. My hope again is just help you see that look, there's things that you can see. And we didn't see these in hindsight. We literally saw this as they were happening. So when they were happening, it's like, wait a second, this is not supposed to happen. Or once it happens, I have this thing where I said, we don't guess, we don't wish, we don't hope, we don't feel, we don't think. We see something, we know what it's telling us, and then we know what to expect. Okay. And then if something happens where it doesn't work out that way, we also know what to do. And so that's one of the biggest things that is important here is like you see, and you know what to expect. Okay. This is GBTC, hilltop pattern, right when it started coming down on the monthly time frame. What made me start telling people, say, hey, get out, get out, get out of this, is because we saw something that we call a selling pressure, which I'm not going to go into today. There was bearish and Rami signals that we saw. We zoomed into the weekly time frame. We seen hilltops. I said, well, there's too many bearish signals showing up on a stock like this that we should definitely pay attention. Here's a hilltop on Tesla when it started going down. Now look at what we have here, a hilltop at the bottom, right? Just like somebody mentioned this, I think Trader mentioned this. Hey, it has a hilltop on the weekly chart at the bottom. Let's take a look at this on the daily chart too. See what we have over here. Well, we didn't really have one down here on the daily chart. Let me see, maybe they saw this on the monthly, I'm not sure. Yeah, not on the monthly. So they must have seen this on the weekly, okay? But on the monthly time frame, here is a huge hilltop, which again was a warning sign that, pay attention to Tesla, something is not right. NEO, I will never forget how there were some people who would say NEO is going higher. It's going to 100, 200, 300, 400, right? And I kept on seeing, I was like, wow, if it's really going up there, why are they showing bearish signals? Why are they showing bearish signals? This right here, at this top right here, that was a hilltop pattern. You go to the monthly time frame, and then they produce another hilltop. And it's like, when you start seeing this on bigger time frames, this is an issue. That's a huge issue, okay? That's a huge, huge issue if they start showing up on bigger time frames. And this is something that people don't understand. I showed this one ADDYY because this is Adidas, because literally yesterday I got people texting me saying, hey, it's very frustrating trying to explain to people on social media that just because Kanye West, if you know who that guy is, Kanye West, Adidas broke their relationship with Kanye West. They parted ways with Kanye West, and now their stocks is dropping. And so these students of mine would say, no, it's not because of that. The stock has been dropping for quite some time. And they were trying so hard to explain to people, it's like, no, it has nothing to do with this news about Kanye West and Adidas parting ways. Adidas has been suffering for months, like even since last year. And you can see right here again with the hilltop where it started struggling. And is it any surprise that Adidas has dropped from almost $200 to $50, ladies and gentlemen, with one simple signal? This is why I say you can see the warning signs of a crash even before it happens. Okay. Can I look at Google and Tesla current week? Yeah, let's go ahead and look at that. So here's Google current week. Are you looking at the daily chart, weekly chart? What time frame are you looking at, trader? Not sure what time frame you want to look at. So this is the daily chart. This is the weekly chart of Tesla. I mean, of Google right now. See this hilltop right now? What does this tell me? Well, this tells me that, hey, get ready for something to happen with Google. Okay, get ready for something to happen with Google. That makes sense? Yes. What have we seen? We've seen this happen. Like what? It has been going down, right? This is what we see. We've been going down. So I'll just give you one thing. One of the confirmations of a hilltop is that when you see a hilltop, you want to draw a box or a range. Let me just do that real quick. Let me use this instead. This is one of the ways we confirm whether it's going to work. We draw a range right here. You draw, excuse me. You draw a line at the top and a line at the bottom. And here's what's going to happen, trader. If we break out next week and close on Friday, next week Friday, above here, I would bet you money this thing is ready to go higher. However, if it closes below here, trader, I will bet your money is going to go further down. You know, and there's a little bit more stuff that you need to know about, waiting for the confirmation. But the warning sign is there that something big is about to happen. Something big is about to happen. The only question is, which direction is it going to go in? And so that's why I say it's more neutral, right? But then we'll see. And again, but you see, now that you know this, now that you see this, right? This is where it's not, you shouldn't be surprised if you start seeing this thing move, correct? Because you've seen the warning sign now. That's the warning sign. Now we just have to wait for the confirmation and then go with it. But if this starts heading back higher, right? Just like we saw on the daily time frame. Let me see if it happens on the daily time frame here. Okay. Maybe go to the SPX. So right here, I want you guys to see this. When this hilltop happened right here, you draw your line there, you draw your line here. Once it broke to the upside, guess what? I expected to go higher. So when I was on that call on Monday and they said, where do you see the market going this week? And I said, it's going higher. And I said, what percentage of confidence do you have? I said, 90% confident. I am 90% confident the market is going higher simply because of this. So now that we're talking about Google doing the same thing on the weekly, the only problem now, not problem, the only thing you have to do is, because this is on the weekly trader, you have to wait till the end of Friday. Not this Friday, but next Friday, okay? And I'm telling you right now, whichever direction it breaks out, you'll come back to me and thank me later and say, hey, Wally, you were right. Does that make sense? The Fed Wednesday would tell a lot. That's true. So I like that. So man, this is why to me it's like there's a saying I always say: there's the stock market is not random. Okay, it's not random. There are things that you can see. There's things that you can prepare for. There's ways that you can prepare yourself. And again, we don't even know what's going to happen next week. We don't know what's going to happen 2 weeks from now. But I'm telling you, this is how you prepare for this, right? So you know that Feds are coming out next week, Wednesday. They come out. Maybe that shoots things up. Maybe it shoots things down. It doesn't bother me which direction it goes in, because now that I know that Google has shown us this pattern here, it's just a matter of if the Fed comes out and because of that it closes below, it's ready to go further down. If the Fed comes down and because of that news it closes up here by Friday, and I'll say, you know what, it's ready to go up. And people say the market is manipulated. Yeah, maybe it is. But wouldn't it be nice if you know how to be on the right side of all this manipulation? And that's why we call our company Right Side Trading. Be on the right side of it. Let's do Tesla one more and then we'll move on. Same situation, different stock. Okay, same situation, different stock. All right. If you look right here, when we had this hilltop right here, up here, And here, which direction did it break out? The bottom went down. This hilltop right here, you put a line up there, put a line down there. Where did it close? Bottom went down. You look at this hilltop right here, up here, down here. Which direction did it break out of? Are you seeing this trader? Okay, down, boom. It's like boom, boom, boom. Again, it's not even. This is why I said we don't guess, we don't hope, we don't wish. We see, we know, and that's what we expect to happen. Does that make sense? It's very simple. We see things, we know what it's supposed to do, and then we just expect it. The only difference is, again, people don't know what to look for, and that's what I've spent years studying, like what to look for to help us see these things. Okay, excellent. All right, so I got to wrap things up because I only have 15 more minutes to end this. But again, here's another stock, TSM Semiconductors. A lot of people are like, oh, what's going on in the semiconductor industry, et cetera, et cetera, et cetera. Again, if you understood what to look for, that was a hilltop, as slightly as that might be. And this is why I said a lot of people they don't even know what to look for, so they miss out on stuff. But here is a hilltop right here, whereby the line here, the bottom of this green was here. You can see that, and the top was right there. And like I said, whichever direction we break out of, that's usually where it's gonna go. Boom, broke out to this downside. Once that happened, to say that, hey, nobody could have predicted this, well, maybe we couldn't predict it. But once we see it, I always tell people, look, I'm not going to predict the future, but I can tell you what the charts are communicating. Okay, learn to understand what the charts are communicating. Google is communicating, look, we're at a junction where it's going to have an explosive move, either to the upside, to the downside. Hold on to your horses, fasten your seatbelt. We'll let you know by next week. That's good information to be aware of. And that's kind of like what this is all about. Does that make sense? All right. So let me just move on because, again, there's a lot that I can show you. My hope was that today you just saw a little bit. It's like, hey, you know what? This is fairly simple. If I put some time to studying the right information, if I put some time to studying the data that I need to, that is pertinent data, then I can use this to my advantage. So what I want to do is invite you guys to get my course on advanced candlesticks. I have a candlestick course, the advanced version, where you can learn all this stuff. I'm going to show you the most reliable candlesticks before rally. Like I said, there's about 100 different candlesticks out there, hundreds. Rather than spending time studying all 100, let me show you the ones that are the most reliable, okay? Because at the end of the day, honestly, there's only about 6 or 7 of them that you really, really need to master. I tell people it's almost like the alphabet. If you understand these 6 or 7, you can analyze any chart there is out there. Okay, and I will show you 2 additional powerful candlestick signals that when you see these things, you say, hey, pay attention to these because these are going to really make these stocks move. The other thing is, how can you tell when the market is making top-end patterns? What about bottom-end patterns? Being able to see these things. A lot of people right now are saying to themselves, hey, have we hit the bottom yet? And I'm saying, no, we haven't. We haven't hit the bottom yet, but expect a relief rally. Why is it that I know these things? And we've been calling this over and over and over when we told people in January, watch out, the writing is on the wall, get out, get out, get out. It's because we saw topping patterns. In March, when we saw the bottom and say, hey, sell get out of all your shorts, get ready for a rally. It's because we saw that. When I was on the podcast on Monday and they said, hey, what percentage of confidence do you have? I said, I have a 90% confidence rate that this is going to go higher simply because I had seen bottoming patterns taking place. I'll show you how to see trending candlesticks that when you see them, it kind of hints to the idea that, hey, this stock or this market is about to start trending. What are the confirmation? I showed you one type of confirmation on the hilltop, but what about the other candlesticks? What are the confirmation that they need to have? Breakout candlesticks. A lot of people like to trade breakouts, but do you know which breakouts are better than others? Being able to see these things and know these things, okay, are so important. All right. You can use this on any time frame. Trade to trade, say, look, I just saw this on the 15-minute time frame. Okay, great. Now that you see these things, what are the confirmation that you need to use? Once I show you, even when you come into this advanced course, I show you some indicators that even helps you filter things out, so that way, what if it is a false signal? These indicators, you add this to the candlesticks, like literally, again, when I say you can see with your own two eyes, you don't even need anybody to tell you these things. You can do these on your own. Once you're able to do this, you can identify the right type of setups for each candlesticks. You know which ones are right ones and which ones are not. You can tell the fake ones from the real ones. What are the best conditions to get into some of these candlesticks? Because sometimes, what if it's just a choppy market? And it's like, even though they're showing up, it's like, it's a choppy market. Don't do this yet. Don't rely on these. These are things that really helps you identify when you should be getting into it, when you should not, when should you put your stops in, when you shouldn't, planning your trades better, and on and on and on. Okay. The other thing I tell people psychologically, it helps you get rid of having to guess, having to have that fear of missing out. If any of these things have ever happened to you, you look at stocks in hindsight, oh man, I wish I had stayed in, or oh man, I wish I had got out, or hey, the Feds are coming out, I don't know what to do, I don't know what to do. We just talked about Fed, Yetman just mentioned, they say Fed is coming out. What do you do that the Feds are coming out? Should, and then after they make the announcement, do we stop buying? Do we not stop buying? People are not aware of what to do. And it's all guessing, guessing, guessing. Take the guesswork out of it, understand what the charts are communicating, get ready, and do what you need to do. Make sense? So no worries about recession, wondering when it's time to sell. Are you staying in your trade for too long? Do you regret selling too early? Literally, a lot of this stuff can be eliminated if you just take this time to understand how to read candlesticks. And what if you already know about candlesticks and there are already too many? Well, I'm going to give you my top 7. Like I said, it's about 6 or 7 of them out there, and the cheat sheet to them. You understand these 7s, and I promise you, you do not have to understand anything else about candlesticks. Just learn these 7s that I'm going to show you in this workshop, in this course, and that's all you will ever need to see. And in addition to that, I'm going to give you my 5-step approach that I personally use to kind of like look at stocks, look at cryptocurrencies. I don't trade Forex, but you can use it in Forex. I don't trade futures, but you can use it in futures. I don't even trade cryptocurrencies, but I study because I know a lot of people get involved in cryptocurrencies nowadays. And so I show them how to do this stuff. And I've had students that have done really, really well with cryptocurrency. So here's what you're going to get. My advanced candlestick course, which if you go to our website right now, literally rightside and go to our courses page, it's $647. I'll give you my my cheat sheet to kind of help you with that. The other thing too is, like, in this course, you learn how to profile a stock. Like I mentioned, which ones are going to work best, which ones are not. Here's an example of something that I wrote to people back in 2019, because we've been doing this for a while now. If you go back to December 2019, you can go back on your own time and just check it out. You'll see where I said, look, today, Tesla's daily chart has confirmed the bullish trend, that, the setup like today is usually a good time to add to your existing positions. This was right before Tesla became the Tesla that everybody knew. How is it that we saw this back in December of 2019? Okay, it's not rocket science. One of the bonuses I'm going to give you to kind of help you make sure that you understand how to really understand the market is also my video and course on volatility. A lot of people have experienced volatility recently, okay? And there's people who say there's no way you can tell when volatility is ready to spike. There's no way to tell when it's ready to end. And I disagree. So I'm going to give you this course for free. I sell this for $497, almost 500 bucks, but I'll give it to you for free because I want you to see how to identify volatility in the market, so that when you see volatility ready to spike, you say, hey, you know what? Maybe I should sit on the sideline. When you see volatility is coming down, you better be jumping into the market. This is kind of like what goes along with the whole idea of like knowing when to invest, knowing when not to do something. Okay. Here's an example of a guy who actually got the volatility course. And I want you to see this, December 26, 2018. He said, if I understand this VIX course that you talked about, I should be seeing a downturn in the VIX very soon, which means that volatility is about to go down. And this means that the market is getting ready to rise. Now, at the time that he wrote this, this is what the market was doing then. This was 2018. I don't know if anybody remembers this. It was the day after Christmas, 9:50 a.m. And he's looking at this. I just literally finished watching your session on this video, and it's already happening right now. And am I wrong if I'm saying that, hey, what I just learned from what you talk about in this course is actually happening right now? The market is getting ready to rally. Now, look at where the market was after a huge drop in the price of the market, right? And he sees this at 9:50. He comes back and say, hey, this looks like a market that's ready to rally. Look at what happened from that point on. Literally went back to new all-time highs. Let me show you guys this again, because this is a student who literally watched the video. 9:50 a.m., just watched it a few days ago. Say, what I just watched is really literally happening right now. And this means that we should see the market rise. And that's exactly what happened to the market. No guessing, no hoping, no wishing, understanding what to look for. You're the best chartist, is what somebody said. Everything that's happening in the market right now, I saw it coming last week because of your video on volatility. Ladies and gentlemen, you need this, okay? You need this to help you. So I'm just going to fast forward because I'm running out of time. One more thing I'm going to do. How do you find trending stocks? I'm going to give you access to my software that we use to find trending stocks as well. Okay, here's an example of Disney. I talk about how Disney tends to rally in October, especially after earnings. Today, we have a confirmation of a bullish signal. Now, once you understand candlesticks and you now understand how to find the ones that are going to trend, you combine the two together and you can work magic. Here's the platform right here that we have. You'll see right here in August, Disney tends to drop. From October to November, we can see that it rallies. When you combine that and then you understand what candlesticks to look for, you can hit the hammer on the nail over and over and over. Here's Disney 2015, August, it drops. October, it rallied. 2016, August, it drops. October, it rallies. 2017, August, it drops. October, this happens over and over and over. 2018, 2019, it drops, it rallies. 2020, it drops, it rallies. Guess what it did this year? Same thing. It's dropped all through August. And look at what Disney is beginning to do. And ladies and gentlemen, guess what this was down here? In October, when we knew that Disney is supposed to be rallying, and we saw one of those patterns that tells us it's getting ready to rally. So I'm going to give you 30 days access to this platform so you can use that to kind of help you with your trade. Go to this link right here, rightsideTrading.com/candles. rightsideTrading.com/candles. Do not type in www. Just go to rightsideTrading.com/candle. Individually, everything comes out to about $2,000. I'm going to give it to you for $299. Okay, $299 just to get started, so that you guys can start seeing that this is not guessing, this is not hoping, this is not wishing. You can really make a difference. All right. And for anybody who decides to take action today only, I'm going to give you an additional $100 off of this. Okay. Not only do you get an additional $100 off, but I will give you one more extra month. So you get 2 months of this platform to use this to help you. And then I'm going to invite you. This one I didn't even say. I'm going to invite you to my my weekly Monday night webinars, where you can come in, see how we use this stuff, see how to use this for yourself. We'll talk about the market, state of the market, what's going on, et cetera, et cetera, et cetera. But for those who take action today, before midnight tonight, you get this for $199. All of this, my extra video, my software for 2 months, you know, the fixed volatility, everything. Okay, and you also have access to ask any questions that you might have. I'm in is what I'm hearing from Trader Trader. Thank you. I welcome you guys. Again, you won't regret this. Okay, for $199, $200. I'm pretty sure there are people who've lost more than $200 since the beginning of this year. What if that $200 investment changes the way you see the market? No more guessing, no more worried about whether the market is being manipulated. You can be on the right side of the market from here on out, just understanding clear signs that the market is communicating. My time is up, so I'm going to go ahead and turn it back over. Thank you so much, everybody.
Well, for those that don't know, my name is David Morgan, and I write a financial newsletter that covers geopolitics, the big picture, bonds, stocks, commodities, you name it. We cover it in what I call opening thoughts, and that is always covers gold, silver, and energy. And again, all the markets. But my specialty is in the resource sector, and we do it mostly through equities. And Anna, thank you for inviting me again. I know this is about trading, but I'm not going to talk about trading today. I'm going to present an opportunity to you that is not even available yet, but it will be shortly. And so let's get on with the presentation. Well, now let's get the screen to move. There we go. So just so you know, I'm not a registered investment advisor. I have worked for certified financial planners. I have close relationships with some registered investment advisors. But in my world of financial newsletter writing, you don't have to be. But I cannot give individual advice. Therefore, the format that I have is in the reports. And in the reports, there's a model portfolio. And the premium members get my handsome face on videos, usually 3 or 4 a month. It could be questions to me, could be what's happening in the bond market, stock market, silver market, the wheat market, or whatever. And I just do a presentation by video, show you on the screen. Sometimes it's with technical work, sometimes not. But I work for you, and I'm very sincere with what I do. So that's the disclaimer. What I'm going to talk about now is the gold Dow. Now, full disclosure here, I am already a participant in this. Like a lot of initial investments, when you're at the seed round, you're limited. So the SEC and the other agencies in other countries, they want to make sure that no one gets like a super advantage on anybody else. So they'll limit the amount of money you can put in. For example, on a seed round in a mining stock, usually the most you can put in is 50,000. Well, someone like Eric Sprott could put in 5 million and not bat an eye. He's a billionaire. But if he did that and they were only raising 2.5 million, he's already double the amount that the startup really needs to raise to start the business. So here in the gold Dow, 4,000 was the limit. I put in 4,000, as did some of the other people. And let me just explain. Well, first of all, you're going to say, I know what gold is, but what the heck is a Dow? So you can go to my website, themorganreport.com, and go to the blog section. And in the blog section, you can see this area here. I think there's a pen. I've used it once before, Anna. I'm not the best at it. Is that the pen? Yeah, it is, pen. So right up here in this, just type in gold Dow. Yeah, and I'm not going to do it because my writing is so bad. But type in gold Dow here. This will come up. I did a 45-minute presentation. You can read about it. Oops, way ahead of myself now. How do I get back? Okay, so that's a good way to start. But let's go a little further. So the gold standard Dow is explained here a little bit, and we'll continue on. So hopefully it becomes clear. But it's a way to invest in the gold and get an interest on it. And the way the interest is achieved is by a couple of ways. One is the contango, or the futures price of gold. The other is what interest rates are being paid. So it's called pairs. And this is rather sophisticated, but I know this audience is. But there's a yield in all commodities because of the futures price. In other words, it's going to cost more for an ounce of gold in the future than it does now, because there's an interest rate attached to everything. As we all know, a mortgage, a T-bond, T-bill, any loan that you get has got an interest rate. So we take that interest rate and use it to buy more gold. And so you are paid in gold as you invest in the Dow. Again, I told you I'm invested in it. And this particular Dow has partnered with Load, and I am an ambassador for Load. So I was one of the lead investors in Load. And when it started, it was a silver only project. And the only way you could participate in this cryptocurrency, or I should really say blockchain-based currency, was with silver initially. That's no longer true. But in the very beginning, you had to contribute a minimum of 100 ounces of silver or multiples of that to become involved with this project. And of course I did, and it's been several years. It's seasoned now. It's come quite a ways. So it's a solution for trading in gold where basically you do a downstroke, you put in your 4,000, 510. There's not the 4,000 limit on the next round here. There's no central authority. We, mint the tokens, which is just a way of saying the interest rate, and you can stack up your interest, and it's a good way to build a gold portfolio with limited risk. Again, the whole foundation had to be with someone that works in this space, which Lode works in the gold and silver space on the blockchain. And Lode is actually registered as a Swiss corporate legal entity. And again, I told you I started with the company right from the get-go. And the reason we chose Switzerland is, first of all, integrity. Secondly, you may or may not know that almost all of you have heard of the Silicon Valley. Well, there's the crypto valley in Switzerland. When cryptos really started to gain momentum several years ago, like I said, this program's been around for 5. So going back 5, 6, 7 years ago, it seemed as if most of the real expertise that were really doing projects that were worthwhile were coming out of Switzerland. And we knew that. And because of that fact, we went there and discovered that that was a good place for us to initiate what we've done with the Lode project. So every AUX, AU, as most of you know, is the symbol for gold, and it's AUX at the end. It is the coin. It's backed by 9999 fine investment grade gold, and it's insured. We mint the AUX ourselves, and we sell the gold into the global marketplace. So decentralized finance for gold, that's the DAO, decentralized autonomous organization, decentralized autonomous organization. So it's pretty private. Again, I would say this is a good way for most people that don't want to bother with the ups and downs and the fluctuations of the gold price and all that. You just buy in and you start earning interest on the gold amount that you start with. Not saying the price doesn't change, it does, but it's a way to optimize your yield in gold. And that's important. You can take a loan and repay if you wish. More about that later. They haven't really built that out all the way. The gold is backed by NFTs, non-fungible tokens, which is really a security thing. I mean, you can put these non-fungible tokens on a bar. They're unique, and they provide a level of security that's probably at the highest level today in the cryptocurrency space. Most people know something about non-fungible tokens. So this will be available by the end of this year. That's what I'm being told. I'm also well aware that a lot of these projects take longer than advertised, so I won't guarantee it. But if you want to get involved or learn more about it, the best thing to do is to go to our website, themorganreport.com, and sign up for our free newsletter, and that will keep you in the loop. The other thing you can do is just you could go to the Lode website and sign up for their newsletter. The best URL is ag.lode.one. So that's AG, the symbol for silver, .lode.one. So one is spelled out. It's not the numeral 1. ag.lode.one. And I'll show you that here in a minute. And If you have the ability to take out your phone, scan the QR code, we'll put you in the free email list that I just described. I'll leave it on there for 30 seconds or so. Everyone's using QR codes these days. So my webmaster said I should use one. So here we are. All right, I'll leave it at that. Do you have a YouTube presence? Also have a pretty big presence on Twitter. I do, it's called Spaces, once or twice a month, which is basically a channel, or it's run through Twitter, and it's live stream. Usually it's 2, 3, or 4 people that are speaking from their expertise to a group, and it's a question and answer format usually. Actually, which seems to be very popular. Again, I've done it a few times, and I don't know what that means. So let me bring some other stuff over here. Okay, good. All right, so go a little further. So here's the free, so you can sign up here, use the QR code. You want to be there. So this is sales copy, basically. It's all truthful, talked about what's happened in the stock market, and you can go broke literally overnight. Doesn't happen often, it's rare, but doesn't seem to want to bring up the next screen. And I've still got, there we go. So this is I just clicked that, and I'm not going to read this whole thing to you. What's important for those that haven't watched this interview, so you scroll down, you click that, you could go broke in 24 hours. You click that, and this is the long sales copy here, which I'm not going to read to you, and I'm going through it pretty quick. I'll come back to it later when I get your permission to try to sell you the letter, but this is free. This is an interview from Stansberry Research. The woman on the left is Daniela Cambode. She and I have known each other for years and years and years. I did a presentation for USA Watchdog, and I talked about bail-ins and how most people didn't know what they were. And anyone that's in a bank in Canada, the US, or the UK is subject to bail-in. You are an unsecured creditor of the bank. When you put your money into their bank, it becomes their money, not yours. And most people aren't aware of that, and they don't know the legal ramifications, and they don't know the jeopardy that they're in. So she heard the USA Watchdog interview and said, I really want to, do an interview on the same topic. And I said, I'm slammed this week. I mean, I'm just like, I can't do it, not this week. And she said, well, is there any way possible? I said, well, yeah, I've got a break between now and whatever. I can do it from my car with my car phone. And she said, great. This is the only video I've ever done with my car phone. And it's gotten over 2 million views. It's the most viewed video I've ever done. But it has a lot to do with the subject line: banks to seize your money in the coming financial crisis. And it's not a joke, they are. And so you've got to preserve your wealth one way or another. I think gold and silver are the easiest to understand. They have a history of thousands of years. I'm not a gold or silver broker. If you're going to buy in the 50,000 range or higher, contact me through our website, support@themorganreport.com. That's support@themorganreport.com. 50,000 and up US, you will be able to work with me directly. I am not a broker dealer. I'll put you in touch with one that's not very well known compared to all these characters that are on the internet hawking their wares day after day after day after day. It says there's no silver available, but I got plenty, buy it from me. Well, we don't do that. I will save you significantly what the premiums are advertised on these, let's say, other outlets versus what I can do for you. But we can only do it if we're talking size. And 50,000 may be a lot to a lot of people. People on this call, not necessarily so. And obviously, you can deal in the millions if you're so inclined. So I want you to watch this free. It's on the website, as I showed you. I'm going to go back to the home page. Yeah, slow internet today. And so the main thing for free here is the blog. So just go to the blog tab, hit the blog. And here again, I already showed you with the pen that that you can type in anything over here you wish. Crypto conspiracy. I've done 25 of these. This has to do with Bitcoin, Ethereum, the banks. Basically, the Bitcoin's been hacked, been hijacked, rather, I should say hacked. It's been hijacked by the banking elites, and most people aren't aware of that. As you can see, there's 25 going backwards. As I said, I did 25 of them. So if you hit the 2 down there, you go back in time. If you hit the 3 back there, you go back in time to the very first one. And you certainly don't have to watch them all, but I would suggest you do number 1 and learn about the outline. Number 5 is very much worthwhile. And there's others. 14 with Kurt Wuckert. And number 24, very recent, I did with Kent Lewis, having to do with what's coming in our future monetary system. So, Anna, can you give me a heads up? How much time have I got left?
You are the last presenter for today, so you can take as much time as you need.
Oh, you're always so good to me. Okay, well, I've been up since 4 in the morning, and this is like my 3rd presentation today. But let me just do some more key things for everyone here. And so this is where you get the free information, is on the blog. All posts. So the most recent are at the top. And let me go back a little bit to the home page, if I can get there. No, I can. I just got to play with it a little bit. I go back. Okay. So if you're a novice or whatever, I mean, I've written 3 books. This one's the Second Chance is available on Amazon. It's the last one written by myself and David Smith. I've had people call and say, I've read, several investment books. This is the best investment book I've ever read. And I'm just telling what people have said. Obviously, it's worth the $20, whatever it sells for here on Amazon. Of course, we have other books besides that. The Get the Skinny on Silver is really out of print. You can probably buy it for $1 or $2 on Amazon used. It's a primer. Most of it's still valid. I wrote it years ago, but it's something that if you wish for, you could. The masterpiece is the Silver Manifesto. This is highly acclaimed. Mike Maloney said it was the best book he's ever read on silver. You can read the 5-star accolades. There's some people that don't read it and they say it's no good. They say stuff that I know they haven't read the book in their comments, but you can't control that, and it doesn't work. And I'm not here to sell books. I'm just making you aware of the website and what's available. So the meat and potatoes of what I do is inequities. And we talk about that. First of all, we talk about decline of the dollar. Everyone probably well aware of that. We really, if you look at what the Federal Reserve tells us, the dollar's almost dead. Since the 120 years the Fed's been around, the dollar's decreased, and it's lost basically 98% of its spending power. So we're really arguing over what's going to happen to the next 2 cents worth of purchasing power. Bitcoin, I'm neutral on it and slightly negative. If you watch the Crypto Conspiracy series, you'll know why, and you can make up your own mind. But the tie to Jeffrey Epstein with Bitcoin is rather significant. The tie to Bitcoin with MIT is rather significant. The tie with Bitcoin to those that sprout from Epstein and MIT is rather significant. And I really don't want a lot to do with it based on who's behind it and the fact it's been hijacked by the banks anyway. So talking about inflation, and we did this acceleration and we haven't seen anything yet. It's true, inflation is going to increase and get worse regardless of what the powers that be tell you. Personal letter from myself to you, and we trade and invest. So here's what you get, and this is much underpriced relative to my peer group. Marina Katusa worked for me for a brief time. He left. He went and worked for Doug Casey for several years. He started Katusa Research many years ago. He charges $2,500 when I charge $1,000. There's a guy in the resource sector that does only penny stocks. Brent Cook, great guy, great geologist. His picks are not nearly as good as mine, but he tries really hard. And his course, last time I checked, was $1,650, so $650 more than what I charge. And you don't get what I give. So I give you detailed analysis on precious metals. We've done rare earth, lithium, cobalt, uranium. We're still in uranium, still in the precious metals. We have a couple of asymmetric trades. I'm not really big on lithium at the moment, or copper for that matter. So you get a modern portfolio, and I teach you when you become a member how to use the Morgan report to your maximum advantage. Big money in big companies, mid money in mid tiers, and speculations is when you bet a little to win a lot, and I supervise that for you, and I do updates regularly. Look over my shoulder. This is when I make the videos for you. I'm speaking. I usually don't show my face. It takes up band space. You know, when I have it. Doesn't really matter. I think people rather see the screen, the full screen, and see what I look like. Anyway, this will save you time, money, and frustration. I'll tell you why I'm waiting for this stock to get a certain level, or why I'm getting out now ahead of the crowd, or whatever the case may be. Updates and alerts. We used to have our own widget that my webmaster designed. We still have it, but we stopped using it because of the text format. And there's a video you can watch here. I don't want to spend too much time selling you. I just want you to know what's available for $1,000 a year. But you can get text updates. And if you don't want text, that's fine. We'll still send you an alert via email. You just won't get it on your phone. But if you want it on your phone, we'll do that. No extra charge, by the way. Research bar none. We do Wall Street quality reports in almost all cases. We are the first on some discoveries, not every one of them, but several. I've been usually the leader in, for example, rare earth elements. We're the first ones to talk about it. Even though Jim Dimes claimed to be the first rare earth element bug, the truth is I was right about rare earth elements. Jim was getting my report, and then he became the original. Really wasn't. And it wasn't really me. It's a friend of mine that came to me years ago. I won't go into the story, but I was made aware of rare earth elements from him. As a paid member, you can ask me questions and I will answer. I'll guarantee it. And we have a lot of bonus reports that are on the behind the paywall for members only. Coming Currency Collapse, book written by Jerome Smith. Buffett and Silver, a report I wrote. Harvesting Greens from the Pinks. This alone is probably worth $500. This is teaching you, if you are not Canadian, how to buy penny stocks off the pink sheet and not get burned. And believe me, a lot of people do because they don't know this technique. So that was written actually by David Smith. A little bit more about me. And of course, if you want to get started, you click that. I know, Anna, you're giving me time. So just give me a real quick idea of what you get when you are a member. And of course, it's my website. I am a member. If I remember my password here, I'll give you a brief look at the members portal. So there you are in the members portal. So try to construct it where it's not too busy, but I do a lot. My team does a lot. It's not just me. We have a staff. So always the main bread and butter is the report. It's always there. You can't miss it. You click that and you get the current report. And the opening thoughts again are, I've only had like guest editorials a couple times in 23 years. Usually it's my thinking. This is the latest issue from October of this year. And I, tell you very important information, especially in today's times. In this particular report, I re-emphasize the extra pyramid and why the derivatives are unwinding. And as we come down the liquidity pyramid, gold is like the ultimate place to go as paper money fails, which of course the dollar is going higher and higher. You expect that to happen based on this upside down pyramid. I won't read you the whole report. I'll just give you the idea here. And usually they're in a 20, 30 page range. I'm not trying to blur you out. That's a model portfolio. We have the top tier, the mid tier, and the juniors. It's all laid out, pretty easy to follow. And let me see if I could go back. So then you've got the recent updates over here, which I'll just click one and give you a basic idea here how this looks. I don't know how this will play a video within a video, but it'll probably be okay. Welcome, members. It is David with you. It is 11:15 Pacific time zone, and I'm making this recording on the 12th of October, Wednesday. I'm going to start out with some of the questions from the group, the membership. I think it's important for everybody to have a look at. And then I made a note on some topics I want to address. And I'll close out this update. So there you have it. I mean, you know, I am concerned about you, your well-being, your financial health, preservation of wealth. Take questions from my paid members. I mean, I'm a giver. I give. Values there if you know the industry. But I'll just caution you, you know, the gold Dow, I'll send you the info free when it becomes available. If you want to be a member of the Morgan Report, that's fine. If you don't, that's fine. I will caution you that it's not for a beginning investor. If you haven't invested in the stock market before, and most people on this call have, then you're good to go. If you never subscribe to a financial newsletter, it might not be the cup of tea for you. I do specialize in the resource sector, as I've told you 3 or 4 times already, but some people want a general equity letter, which my friend Stephen Lieb, Dr. Lieb, produces one. It's called The Complete Investor. I would suggest you subscribe to him rather than me, but if you want to focus primarily on the precious metals and the resource stocks, then I would be one of your considerations. So I'm going to leave it there. I hopefully gave some good information on the gold Dow. People could park money in gold, get a return on it, just kind of let it ride and build. And then use what I do on my top tiers is I write covered calls, and I show that in the videos. And I take that money and I speculate with it. So I'm pretty much there. If there's any questions, I'll certainly take them. I'm here for you. I don't want to say I'm all about being of service and then just cut and run. So if someone has a question, I've still got enough energy to take a few.